It's already Monday again in this raging bull market. Let's take a look at some setups for Setup Monday at Brave New Coin. Ultimately, there's been a few drivers very recently being retail FOMO, retail plus FOMO, which is sort of hedge fund, bigger money FOMO, that Doge volume we're seeing. We're seeing a lot of rotation around altcoins. ETH obviously breaking out continued price discovery in a big way after being allergic to price discovery for a very long time. So let's take a look at some of those things. The first thing, let's talk about BTC, which thus far has been lethargic, languishing, uneasy, difficult to maintain any sort of momentum. It still looks as though it's trying to break the 58K level. It's trying to form a complete inverted head and shoulders. Again, when you see this V with multiple lows and higher lows, the expectation is reversal. In this case, it'd be continuation, whatever. I'm not going to have that conversation, but ultimately we're seeing continued chart patterns that suggest bullishness in the near term. We'll see if that actually plays out because, again, it's just been absolute massive chop. Anybody who's tried to trade this has quickly realized that, including myself. If we look at the high time frame, moving average, and moving average multiplier, historically we have formed an all-time high once we are well above the 5x 2-year multiplier. Currently that's still at 86, 87. So based on this, I still like 87 plus, 87K plus. Definitely before the end of the year. We'll see what happens between Q3, Q4. There's going to be a lot of people who have a massive tax burden from altcoin gains this year, much like 2017 into 2018. Q3 historically hasn't been great for crypto, specifically BTC. So it's hard to expect Q3 to be bullish, and BTC is kind of running out of room here to run in Q2. So it certainly has a little bit more time to start to run in Q2, but at this moment, it doesn't look like, obviously, we're doing much of anything in Q2, right? So based on seasonality, if we're bullish, we really need to do it in Q2, and if we don't do it in Q2, we really need to do it in Q4, and I still like 87K plus. So ultimately, we're kind of wrestling with that. I know that's more than a setup for the week, but in the back of my mind, that's definitely what I'm thinking. I still like 87. Kind of, the clock is ticking, right? We got to get moving here if we're going to get moving this quarter. Here's how it looks on the pitchfork with a 200-day moving average. The 200-day moving average is moving up nicely. We still haven't tapped to the 200-day since September. I haven't crossed above it since May. I like where it sits though. We were a little hot on the 200-day and it came right up. So support is rising. The median line of the pitchfork is rising. We're still between the R2 and R3 on the yearly pivots. The R4 yearly pivot is like 85. The R5 yearly pivot is like 98, somewhere around there. I still like those levels. It's just hard for me to assume that this is going to look okay in Q3. This is the kind of price action you'd expect in Q3 where it's just like sideways down, unable to do much based on seasonality. So we could just break all the seasonality anyway. I'm okay with that. It's just hard to know what the back testing looks like with seasonality and then just expect this to look okay throughout Q3. So if we ignore seasonality for a moment though, I still like basically this white zone of this pitchfork going into some point in time towards the end of the year. If we can break R3 distinctly, I like exploring R4, which would be 85, 86, 87, again, much like the MA multiplier, right? Most of this stuff kind of lines up. MA multiplier, or the pitchfork diag, yearly pivots, all that stuff is around 85, 86, 87. And that isn't necessarily calling the top. It's just saying that's when things should start to get crazy and we will see the beginning of the end at that point. The euphoria leg is above 86. So it's still a pretty good risk reward here for me for BTC. Here's the daily cloud, which is definitely a weekly setup sort of situation because the TK cross is still bearish on the daily. And what you want for an entry is this exact picture right here. You want to see a bullish TK cross with price above cloud. So we're not there yet on the daily. So chop is okay. Chop is expected because the signals thus far haven't told you to re-long this. It's told you to long down here and close it here. And if you're listening to the cloud, that's all you're doing. You're doing nothing right now. You're in complete limbo. doing a bunch of nothing watching the charts because Cloud is telling you there is no signal here to go long one way or the other based on the TK crosses, which are a type of moving average. So ultimately, if we do get a bullish TK cross above the Cloud, it is the single most bullish signal we can get, suggesting further bullish continuation. So these typically take 10 to 30 days if they're going to happen. And that gives us between sometime in this week and the end of the month for a move to happen based on this cross. So if I see this cross, I am much, much more confident that we are going to see bullish continuation in the near term. Until then, it is very much a waiting game, a wait and see. If you're trading lower time frame MAs and crosses, that sort of thing, this is the Williams alligator for BTC. And how this works is when the MAs are bullish, it's telling you you have permission to go long, permission to look for longs, permission to add to longs. And when it crisscrosses like this, very similar to the Cloud, it's telling you to get out here, get back in here. Currently, these are crossed bullish, these MAs. And the fractals give you precision for your entries, exits, and stop losses. So right now, it's telling you 58.9, so anything above 59K. On a daily close, this is super important, it has to be a daily close. And I'm not just saying this because we've grazed it 3 times and been unsuccessful at going higher. That's just how the system works. If we get a daily close above 59, that is the level at which this system is satisfied with a bullish entry signal. Now you can always just enter a long or start to enter longs once the MAs flip. But once the fractals are broken to the upside, that's telling you to definitely get long at that point. And your stop loss would be the opposite fractal at 53K, which is definitely significantly lower than current price. And those stop losses will also move up over time and function as a trailing stop loss. So it gives you a wide berth initially, and then over time you'll get this trailing stop loss. So I'd definitely be watching for a daily close above 59K this week for BTC as the beginning of the next leg for BTC to the upside. ETH, man, what a chart. ETH has just been on a tear since 2K, since gone are the days that it did a bunch of nothing at all-time highs, right? We're skittish about breaking through 1,000 based on, psychological support resist. Skittish on breaking through 2,000. Didn't care about 3,000. Didn't care about 4,000. And this is how the beginning of the end looks to me most of the time. Once no one cares, everyone's just FOMOing in, right? They just see it's higher than it was yesterday. Why am I not buying this? Why am I not holding this? And meanwhile, I'm looking at this thinking, man, there's a lot of downside here. It's looking closer to the top than the bottom at this point. And again, the MA multipliers, this is the 1 year 365 MA. This is 5 times that. Now, there isn't a lot of data to compare this backtesting wise. It's only an N of 2. And this not only exceeded the MA multiplier, but reconsolidated and went again. So we can certainly see that again for ETH. It might top out at somewhere way above 4.5, 5K, something like that. Break down, go back to the median line, and then over time reconsolidate, retest that MA multiplier. But for me, the trading plan is I will be selling anything above 4.5 slowly over time. The idea is your dollar cost averaging out of a position once it's overbought, your dollar cost averaging in once it's oversold. So for me, I'm way above the trading plan of being a buyer up here. This is definitely closer to the sell zone. Does this go to 10K? Does it go to 20K? There's some 50K strikes now on Deribit, right? Like that could happen, but I will be happy to sell anything above 4.5 based on this. Where you could say we're in a new paradigm. You could say the network's different. EIP 1559. That's fine, but I'll be happy personally selling my holdings above this MA multiplier. And not just based on ETH, but based on all the charts I've looked at, legacy, all of the crypto charts I've looked at using this. It really is hard pressed to get much, much, much higher than the MA multiplier. Now this will move up over time. So the longer it can hold above this, the farther the MA multiplier will move up. But ultimately the goal is to be out of your entire position by the time this breaks through the MA multiplier, just like it did here, right? Your dollar cost averaging, you understand that this is a bear market. You understand that you are massively underwater and will be potentially for quite some time. But the moment this flips above, you're happy with what you have. if you've dollar cost averaged in. And sure, this could go again, right? And again. But ultimately, you're just dollar cost averaging in below, your dollar cost averaging out above. And again, historically, you see bear markets lasting below these MAs more than you see bull markets lasting above these MAs. And a lot of people are talking about the equivalent comparison to BTC, and this is just how it may look for ETH, how BTC tapped that MA multiplier when it was near 4K, went back to that median line, and then went way above for the final leg, and that was it, right? That was a 5x, 6x from there to 20K. Now, this is obviously a different scenario, different situation regarding these pullbacks and the slingshot up. But when I'm just looking for possibilities, this is the kind of stuff I'm scanning through. Daily Cloud and the 200-day moving average for ETH still look great. The 200-day moving average is at 1600 at this point in time. It's almost above all of this 2K consolidation, which is kind of crazy. It's moved up extremely quickly. The cloud support is at 2900 based on the daily Kijun, and historically since November, we've tapped that once, twice, 3 to 6 times here, again here. So it's not out of the question that even if we get that low, we'll still continue. I just don't think at this point, if we actually pull back that far, that will probably be closer to the top than most people are comfortable with, I think. I think it's going to have a hard time recapturing those highs quickly. I mean, we can see here how that happened. We went up very quickly, and then it took another kind of month, 2 months to reconsolidate and make a decision from there. And you can see even how far away it is from the Tenkan. So the speed and pace that this is moving is definitely parabolic and looks concerning to me, looks way overbought. Even on fractals, if I pop on the daily fractals, I don't get a fractal till like 2K if I'm looking for a trailing stop loss, right? Some objective trailing stop loss. I have to go to the 12-hour to get anything, and that's 3,300 as far as stop losses are concerned, based on the fractals. And on a lower time frame, you get a stop loss probably around 3,700. So my bottom line for ETH is be careful. Yeah, it can keep going, but stairs up, elevator down, and we are taking the rocket ship up. We're going to take the the inverse rocket ship down when this eventually slows down, and it will inevitably slow down. I think that's the important part. I don't want to be that guy, that doomer guy that says this is going to zero. I'm just being realistic here. You know, I've seen how this works out, how this plays out. So be careful, definitely. Preserve some gains. Nobody went broke taking profit, that sort of thing. ETH-BTC is another thing to watch. And we can talk about flippening. We can talk about 0.1 plus. You know, that doesn't really matter to me. What really matters is this rate of change. It caught the bottom quite nicely based on this pitchfork. R5 is currently at 0.85 as well. So I like anything up here as far as being okay with rotating out of ETH and into something like BTC. We've had, what, 6 or 7 weeks that are green in a row for ETH-BTC here. So to me, it's looking like it is time, not even from a BTC maxi perspective, just a technical perspective. It's getting time for BTC to start moving again versus ETH, certainly. And then moving to some random charts. If you look at Melon USD, you know, for me, I'd much rather buy setups that look like this. So if you're scanning for charts and you're seeing ETH, which is in this parabolic uprise, versus something like this that has a setup, for me as a trader, I like the setups over just like buy and hope that this goes higher tomorrow, right? The gains might be more dopamine driven for ETH, right? Versus this, because you're kind of waiting. But ultimately, for me, the setups on stuff like this looks better. And there are setups like this on a variety of charts. Lastly, I'll just mention LTC, BTC, tons and tons and tons of BTC charts look like this, where on the weekly BTC chart, we're seeing a massive potential still. This is a little less than a 2x at this point, but that's a massive regain for LTC. And just like ETH, BTC, how some of these alts have moved historically, they grind slowly over time down. They almost take the stairs down and the elevator up. You know, it's kind of opposite just what you'd expect in any market. But this is sold off for years, right? Stellar's the same. EOS is kind of the same. And it doesn't matter how you feel about these coins fundamentally, if you think they're garbage or whatever. If you're looking to rotate and speculate into stuff, you're going to start to see a lot of this stuff reverse. And the same goes with for the ETH charts. Anything that looks like absolute mega doom against ETH is the kind of thing where as a trader, you have to think, okay, this may be a good time to start rotating into some of this stuff. Not all of it, but if you're looking for a place to put your ETH, right? Is it USD? Maybe that's an option for some people. Is it another altcoin that has underperformed ETH substantially, which is basically everything? That is also an option. Is it BTC? That is also an option. You know, so whatever's right for you in your own trading plan, but I'd certainly consider it. That's all I'm saying. Take a good look at the gains and think about the potential upsides for some of these charts versus the potential downsides. Look at the risk, look at the reward, have some conviction one way or the other. And speaking of tradings and rotations, lastly, I'll just mention the TCAP ETH-BTC fund on Enzyme.finance. This is a fund that I trade. I'm the portfolio manager of this, currently at 5 million AUM, which is awesome. You can see everything. You can see performance, the trades I make, the allocations. You can even see who deposits and withdraws, which I think is very interesting. And really the big thing is you can see all the trades I make. So if you want to, follow me outside of this and see what I'm actually doing, it's one thing to analyze the market, but it's another thing to actually put your money where your mouth is. So even with this allocation at 47% ETH, 35% BTC, I wasn't aggressive enough rotating into ETH, but I think I'll be more aggressive rotating into BTC if those technicals are aligning over the next 10 to 20 days for BTC versus ETH. So I don't have leverage on here, but I can short it through inverse synths through synthetics. So I can do something like an inverse ETH or inverse BTC, and you'll see that listed here if I'm actually short on any of that stuff. How that works is you're just long the downside essentially. And you can deposit ETH or USDC to this if you're interested in joining the fund. And this is a managed DeFi portfolio, very similar to deposit ETH or USDC. And this one has 15 to 20 DeFi coins, which have really underperformed recently, ETH especially. So this doesn't measure itself against ETH. Both of these are USDC benchmark. But again, I'm expecting these, once ETH cools down, I'm expecting some rotation into some of this stuff into BTC if we do get another leg. The worst thing we want to see is everything tumbling against USD, because then we won't get a rotation into some of this stuff. We won't get another leg up into some of this stuff, and DeFi will get slaughtered against USDC unless ETH can calm down and we see a rotation into DeFi. So this is definitely the higher risk, higher reward play versus ETH-BTC. But if you have any questions on any of that, let me know in the comments below. Like, dislike, comment, share, subscribe. Let me know what you're looking at. Let me know if you've got any setups that I've missed. Link BTC looks good to me. Link USD continues to just move slowly. 1inch was hitting all-time highs the other day. I mean, there's a lot of stuff that just continues to move decently well, just not as well as Doge has been, not as well as some of these scams have been, and definitely not as well as ETH has been. But that's, for me, that's the time when I get excited about stuff, because I can rotate into things that haven't moved yet. So that's all I have for this one. Happy trading.